Alrighty, welcome back to Weenie Trades. In this video, I'm going to be giving a SPY and QQQ technical analysis and what I'm planning to do with my investments based off this market environment. So let's get right into the video. Let's talk about SPY. SPY short term had a little bit of a gap down, but then started to rip up. And if you were watching the morning live stream, I was saying, hey, SPY probably going to rally today because we're a little bit oversold into support. What we were talking about right here is look. We've got these higher low trends, higher low, higher low, higher low, higher low, higher low. We gapped into support. If you're gapping into support, it's very likely that we're going to have a bounce. So SPY, where's SPY headed? What's bullish? What's bearish? Well, SPY, if we look at the hourly time frame and just clear the drawing set, well, look at this pivot right here. Look, I'll just grab this price level right here. Look at this, how many times we hit this top. Top, 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 top. We break out, we hold it as support. Great. Hold that support again. Held it as support again. Oh, we broke down underneath it. And that's why I was going short. I said 442 was a flush point in that SPY technical analysis video. And that's what caused SPY to flush, just that key level. 442 is going to be a key area. If the bulls can get above 442, I would say it's slightly bullish, but still really just neutral because we still have 444 that's had quite a lot of resistance. Do we see that? So we bounce into support. Yay, we bounce. Oh no, now it's resistance. And it was still resistance. So that's going to be some resistance. So if we hold above 444, we could see new all-time highs pretty quickly. But this is the sideways / neutral bullish zone. I'm just going to draw some boxes. So this yellow box is, let's just make it like, okay, light blue, like the bulls are kind of chilling. But in this zone right here, I would say that the bears are winning. So technically the bears are winning. SPY is still kind of breaking down. Now, the market could just be range bound. This is assuming that we actually get follow through in one direction. That's generally a bad assumption, especially in this market environment lately. Okay, so the blue represents chillin', like it's sideways to slightly bullish. The green represents, hey, we're just bullish. You know, we're very likely to continue on higher because we're starting to break out of these key areas. This box, instead of red, I'm just going to make it yellow, like caution, like, hey, market's kind of saying caution right now. And if SPY starts really closing underneath 440, I still think that's pretty bearish. So this is kind of like a bear zone. We'll just make it like purple, and then I'll make it red. It's really bad if SPY is coming underneath and a closing hourly underneath 438. That would be extremely bearish in the short term, and SPY could see some pretty significant downside. Maybe a short term, a bigger pullback, or morph into a little correction. And that could bring the SPY back to this previous breakout area down here at 425 down to 420. We'll see where the SPY wants to go moving forward. So because of where the SPY is on the daily chart, what I do with my investing is I like to dollar cost average. When the market is pretty high up and potentially at risk for a pullback, doesn't mean it has to pull back. SPY could continue to just go higher. But because there's a greater potential for a pullback at this area and, you know, different news catalysts and seasonalities of the market, because the market could pull back, what do? I still invest. This is my M1 Finance portfolio, by the way. And just a quick update, started this last year in June, and I've just been adding $50 every week. $50 a week, that's my dollar cost averaging. $50 a week. And I've been waiting for a dip to actually do something like $100 a week. But the thing is the SPY really hasn't given me any extreme dips ever since the initial virus crash last year in 2020. So because SPY hasn't given me crazy dips, I've just kind of kept steadily investing. As you can see, it's been doing very well. You can see my holdings over here, Google Square. I might trim some of these positions depending on how the market unfolds. Right now, my dollar cost average is about $50 a week. What I'm going to do is I'm just going to be storing up that cash just a little bit because the market could be having a significant pullback, or at least a decent pullback. So because I'm dollar cost averaging at about $50 per week, if the market starts to drop significantly, I actually want to increase the amount that I'm dollar cost averaging by, because that way I'm able to get a little bit better deals. If you're just buying all-time highs, you're really just buying a lot of risk. I mean, they always say time in the market over timing the market. I agree with that for investing a little bit, but timing can help quite a bit. And if you can just invest a little bit more on the dips, and invest on the green candles. That's where you can get those really good returns. So that's what I'm planning to do with my M1 Finance portfolio. If the market starts to pull back, I'm going to add a little bit more per week. Otherwise, if the market just goes sideways or continues to go higher, you know, I might just keep that same dollar cost average going based off the investing. Investing, not much changes to it. You just buy great companies at great deals that you like and you understand, and have the volatility that you are comfortable with. So hopefully you guys enjoyed the SPY technical analysis. If we briefly go over the Qs, high base on the weekly time frame. We moved higher. Now we're just going sideways. This sideways consolidation period, although it's torturous and really choppy to trade, you know, if you see just tons of small little green trades, small little red trades, nothing really going on in the overall markets. They could have that significant pullback. Otherwise, we could just be going sideways for just a bit on the Qs. And if the Qs really start to break this, we could start to break the Qs to the upside, in which case I'll just keep on dollar cost averaging and buy my favorite tech stocks. You know, Google, Microsoft, those are my favorites. Maybe a little bit more Apple next time. I do want to diversify just a little bit more and broaden my portfolio and just invest a little bit more into ETFs and other things. So hopefully you guys enjoyed the market analysis and what I'm doing with my investing at this point in time. Thanks for tuning in.